Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. Other than I had a tick crawling up my leg 15 seconds ago, which was
That's
your
scary.
whole body starts to, when you find something like that on your body.
Were you able to?
A good way to start the morning. A tick coming up my leg. Ugh.
Yeah.
But with that, you want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do or just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. And with that, let me share my screen.
You notice the floating haze outside in Philadelphia right now?
Oh, is that from the fire from?
Yeah. Coming home when we were in the city last night doing something. My daughter had a lacrosse event she had to go to down near Manayunk.
Yep.
And it was like foggy the whole way home. And I'm like, search the internet, see what's going on. Is there a fire somewhere? And sure enough, there's, I guess, wildfires in Quebec, Canada, are sending a smoky film, as far south, I guess, as DC. And it's actually very, very noticeable.
Yeah, the air quality is bad. And look, but what do? Do you
I guess stay inside or put on a mask. Certainly don't do any strenuous exercise, right?
Yeah. No, it's bad. Well, hopefully. So what happens? You just wait for the wind to blow it over.
You wait for the jet stream to change and just blow it out to sea, I guess, and the fires to stop burning aggressively. Which it is. We have gone through a little bit of a dry spell on the East Coast. I mean, I notice all the areas that hold water by me are very low right now. So, anyways, there you go.
All right. I just want to make a quick note for anyone joining us for the first time. Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, the data analytics. If you have a question, you want to ask a question live, we do provide a link to Zoom on the live chat on YouTube. So click on it. When you come over to Zoom, click on raise your hand. Then you could ask your question live and direct. If you prefer to type your question, you can do that also in that live chat box on YouTube. Will's watching it. He'll read it back to me. And while we're waiting for more people to join us and for any questions to come in, we will start out taking a look at the pre-market report, see if we could get some insights on stocks that are trading in pre-market hours. Then we'll go to the questions afterwards. If we don't get any questions, we'll just kind of continue on the conversations we've been having with risk, portfolio risk, option valuations. Maybe we'll go to a tool and take a look at a Market Chameleon tool, see if we could get more insights. So let's start out with the pre-market report. These are stocks that are trading in the pre-market hours. I'm going to scroll down here, and we have three lists here. We have our most active list, our biggest percentage gainers, biggest percentage decliners. Coming down here, see 81 stocks made our percentage gainers list, 31 on the decliners. So from this perspective, we're looking like we're setting up for a bullish bias at the open. And if you take a look at this list, there are stocks in there. We have small cap stocks, ETFs, leverage products. So any security that is listed on a major U.S. exchange, if it's trading in pre-market hours and it meets our thresholds or volume and change thresholds, it can make this list. And let's take this list and narrow it down to a smaller group of stocks. And we're going to use the filters here above to do that. And let's use this one in ETF. If you click on that, you get a drop-down menu, and you get ETFs to choose from, broad-based sector ETFs. When you choose one of these ETFs, it will filter by holdings that are in that ETF. Okay, let's take SPY. That's S&P 500 ETF. Click on that, and the list below got filtered by stocks that are holdings in the SPY ETF. And here we have 5 stocks made up percentage gainers list, 2 on the decliners. It's not a big list, but slightly more bullish bias there at the open. We could also slide up here and take a look. Today's June 7th. Take a look from a high level, what's going on in the pre-market hours. And this takes the stocks in that are trading in pre-market hours and looks at the ones that are up or down. And we see 468 stocks trading in pre-market hours are higher than the previous day's close. 246 stocks are lower. If we look at the volume of shares that are up versus down, there's 133 million shares that are trading on up volume versus 26.3 million on down volume. And if we convert the volume to dollar volume, since every stock is not trades at the same price, if we convert it to dollar volume, there was $2.2 billion worth of up volume versus 577 million down volume. So from this perspective, we do look, almost from all these perspectives, like a positive bias at the open. Just coming down here, not much sticks out. Netflix up, Tesla's up. A lot of these high cap stocks have been rallying, and I think it's that AI technology, as people are using more and seeing more apps and what it could do to improve productivity in almost every business. I do think that is creating enthusiasm in the stock market. So we continue to see that push. Let me see. I could stop here and take any questions if we have any questions, Will.
Yeah, we had a question from Sarush, and actually he was nice enough yesterday to ask yesterday on Zoom, and I missed it. So I asked again what the question was, and it said, as a credit put spread seller, is it worth it to pursue statistical research and quantitative modeling to improve my system? Thank you very much. We do have a tool that allows you to screen for credit put spreads, don't we?
Yeah. So what is the sorry?
As a credit put seller, is it worth it to pursue statistical research and quantitative modeling to improve my system? That was the question.
Well, I mean, as a trader, you're always trying to improve your system, right? All my years, and I've seen like lots of trading models, trading systems, and traded different trading systems, but you never stop trying to improve your system, right? That's like trying to stop improving your business, or trying to stop, finding new opportunities or better ways of doing things. So you're anything you can do you think that can improve your system? Yes, you should always be doing it. Now, there are going to be lots of things. Part of improving your system is that there are going to be things that you're going to try that don't work out as you expected, don't really improve your system, and these are things that everybody does, because until you try things, you don't know, right? There's no playbook out there and it tells you exactly what to do. So trading is you're continuously improving your trading system. That goes without a doubt. And there is no set of rules or set of steps that you must complete to have a good trading system. It doesn't work that way. It's a constant and evolving system, just like a business. So as far as, analytics go, I can't say that you should limit your analytics to any one type, any one type of regression or any one type of data set. You're looking at it from different perspectives. And if you look, let's just take, some of the, best banks on Wall Street that trade, or hedge funds. It's not like they create a system, then fire everybody, and then just sit back and let a black box trade it. They're always hiring. Look at Citadel. It's one of the best, hedge funds trading outfits out there. But they're continuously hiring. They're continuously improving their systems. They're continuously looking for better ways of doing things, more opportunities. And that goes for banks. Goldman Sachs has had very good, trading systems. They do really, their trading operations do well. So do other ones, but it's not like they have a great quarter and say, great, put that in a black box. Let's forget about it. Fire everybody and just, cash cow it. It doesn't work that way.
Cash cow it.
Or whatever.
That would be good.
Yeah. Trading doesn't work that way. It's dynamic, it's ever changing, and you're continuously tweaking it. And the only way to be successful, in my opinion, in trading is you have to be deeply involved in it. Okay. So you can't tinker with it or do it as a side hustle and, be successful. Trading, you could get lucky, right? It's part of what risk assets is that there's luck involved. Anybody could get lucky in a trade. That's part of, risk assets, right? That's something in financial assets that exists that doesn't exist in other professions. You can't get lucky trying to perform brain surgery on somebody, right? You're not going to get lucky doing that. And you can't get lucky, trying to win a patent lawsuit because you don't know what you're doing. You're not going to get lucky this way. Or even, fixing your plumbing or electricity there with, you need to have the experience and skill sets to be successful, because you're not going to get lucky, with a good outcome. The thing with trading is that you can get lucky, right? You can make a trade that is going to be a winner because we're talking about chance and probability and uncertainty. So that exists, but for trading, for a good trading system and for a good trading, an efficient trading operation, you have to be deeply involved. You have to be, analytical and growing your system on a continuous basis. Okay, and when I say that it's not restricted to any one strategy, it's not restricted to any one analytic, because things are ever changing. They're always evolving, they're always changing in our financial markets, and you have to keep up with that. So as far as is it worth, doing more analysis and getting, trying to become more efficient, then the answer is yes, you should always be doing that. That's what, that's part of trading, that you should always be doing something to improve your trading. Hopefully that, if I understood it correctly.
Yeah, let me know if that helps, Bruce. Thanks for the question.
Right. So when, I guess, when we talk about, I think this one.
Well, he came back. Sorry for the delay. He did come back. He said, super appreciated it for the answer. So how do we improve a trading system without curve fitting or over modeling?
Right. So part of your trading, what, I don't know, maybe I'll put up my notepad. So when you do a trade, right, usually when you do a trade, you have a thesis, right? The trade has some kind of thesis behind it, or you're trying something, right? And then you're going to do, let's say you do the trade. And a lot of trades that you're going to do, if you, and this goes for any trading, trading outfit that I know, a lot of trades you're going to do are going to be testing theses. You're going to be testing your theories or testing something out where you're trying to get feedback from the trade and see what happens. So there's going to be lots of trades you're going to do, and you're going to have losses, right? So what happens with these losses? Now, an amateur will look at a loss, and what are they going to say? It doesn't work. I give up. I'm done. This is the most amateur thing you could do, right? This, it didn't work. This doesn't work. It's not easy. But when you look at losses, you go back and say, what happened, right? How or what could have I done? What could have I learned from this trade to improve it next time? Okay, that should always be the way you improve things, right? You don't just say I lost, then you start, tugging at your head and crying and then saying it's Wall Street's market maker. They're the ones to blame. You go back and say what happened here? How do I reanalyze this, and what could have I done to improve? Did I misspell that? What can I have done to improve? And I do to improve, next time. Okay, so let's say you did a credit put spread, right? Let's say you did a credit put spread, and you thought this was a great setup. The credit put spread looked like, the premium was good. Your theoretical, it was above your theoretical values, and then it didn't work out. Now, it could have just been by chance. There's news that was unexpected. It didn't work out. But maybe you go back and say, what were the clues? What did I miss? What did I miss that I should factor in next time? Okay, what did I miss that I should have factored in next time? Well, wait a minute, was there a Fed meeting? Oh, so I didn't factor that in. You know what? On the Fed meeting, I shouldn't be selling, put spreads, a week before. Maybe I should wait the day before, or I need more premium, or I need to do a different type of strategy around that event. So now you're factoring that in. Okay. Maybe you did a put spread, and then you go back and you're like, well, what happened here? Why was the stock down so much? Oh, this stock had a investor conference call, right? And then their investor conference call, they said something and it made the stock go down, or it made it more volatile than usual. So now I have to factor in that if I'm doing that there may be, a investor conference call, or it's scheduled, the company's scheduled to either present somewhere. And when they do that, the stock has potential to move. So I need to factor that in next time I'm doing a trade. I need to go and look that up and make sure that I considered that before entering the trade next time. Okay. And then reevaluate that trade if it's good or not. maybe there's a different reason for it. Maybe you're like, you know what? Yes, this looked good. The stock had no news, but the market volatility as a whole was high. Everything was high, right? If I looked at SPY, implied volatility was super high. It was indicating we're about to move. The whole market's about to move, right? And there's lots of other stuff going on there that I didn't factor in. So now I have to go back and make sure that next time I improve my model, that I take those things that I didn't consider last time, but I went back and checked that going forward, I will consider. And that's how you're improving your system, because then you're going to do more trades and see if that actually did improve. And if not, how do I keep tweaking it? Should maybe, when I do these spreads, I'm doing them in a part of the day that's not advantageous. I'm doing it because of an impulse or whatever. Maybe the best thing to do is just to wait till the end of the day when, the stock had a chance to fully reprice on that day, and do it at the end of the day instead of constantly trying to do it sometime in the middle of the day, or sometimes in the beginning of the day when I don't have enough information. What's going to happen, what's going on that day. So these are things that you want to start looking back. Were there ways to hedge off some of the risk? Are there maybe, you bought, you were bullish and you bought a call, but when you buy a call, you're also buying Vega, right? And maybe what you wanted to do is just to get exposure for a long delta. Well, you could go back and look, what? I should refine my strategy. And when I'm doing this, maybe a call spread would have been better. Let me try that next time. So continuously improving your system and going back and think what happened here that I didn't consider, and that would have helped me be more prepared. So I am more prepared for the next time. And it's losses should be treated as ways that you go back and improve and tweak your system. That's the feedback loop. You need that feedback loop. If you're not doing that, then you're not really trading. You're not having a like, imagine, here we were talking about a grocery store, right? Let's say you have a grocery store or, supermarket, right? And you have all this stuff. You have milk, you have, what do we say? Corn, whatever it is, right? Well, if you see that you're constantly, losing, on average $2, you go back and say, well, why did I lose $2 in this milk? What did I not consider? Right? What did I not consider here? And you go back, how can I tweak it to get that profitable? Well, maybe what you did was you didn't consider that, that your inventory was too high. And let's say you bought 10 cartons, but you only sold 6, right? Which means 4 of them spoiled and you did a complete loss, right? So these were complete loss. So maybe what you did was you overestimated the inventory you needed. So you start tweaking it, and then you say, well, let me try 6 cartons next time, and let me see if that improves my profitability on milk, right? Maybe that's, maybe I could do something else and try to put the milk next to the cookies. So when people buy cookies, maybe then I will sell more cartons of milk, right? So you're taking the law. What are losses are just signals to you that you may have missed something, or you need to improve something to tweak it to get it better. All right. That's how you have to treat losses are your feedback loop, right? When a company, right, creates a marketing campaign or a new product, they have a feedback loop, looking at what are the customers doing, are they buying this? Is my price too high? Right? Maybe I priced something too high. Maybe it is too complicated and I have to tweak the product to make it more simple, or I have to do, but losses are your feedback loop that, you have to treat them as part of your overall trading system, and you need metrics, right? You need the correct metrics in place to go back and see, well, how am I performing? Where am I lacking? Where can I make improvements, right? Is it in my execution, right? Was it my execution? Was it my, costs, like interest rates or commissions, whatever, was it my, my pricing model? Was it my pricing model, right? Was it my, did I not, was it my hedging? Did I not hedge correctly? Or was I, taking on too much risk, not diversified? So you have to go back and try to, learn from your trades, right? Part of doing the trade is you want to learn from it. And if you're not learning from it, then, then you don't really have a trading system, right? Then you don't really have much. You're going to be taking shots all the time. So you need to learn from those losses. What did I do wrong here? What was it there I could have done to improve it? So it's very important that losses are normal. Everybody has losses, especially when you're trying to create a new trading strategy, a new theory, and so forth. But those are your feedback loops.
That was great, D.
Okay.
I think Sarush, let us know if there's anything else. I thought that was awesome. Great job, my friend.
Yep. All right, everyone. I guess we're right up at 9:30, so I'm gonna leave it there. If if you have any more questions, we'll take them tomorrow. Hope to see you guys tomorrow. Have a great trading day. Stay safe out there.
All right. Great job, D. Great job, Chameleons. Thanks for the questions as always. Everyone have a great trading day, and we will see you tomorrow. Thanks.